Today, we're talking about one of the most important things to consider when you're using a crypto trading platform, the fees. Specifically, what are Uphold's trading fees and spreads? First, let's get this straight. Uphold doesn't charge traditional trading commissions. Instead, they use a spread model. What that means is they bake their fee into the price you see when you make a trade. The price you get is the final price, which is a big plus for transparency. You see the full cost up front. So, how much is that spread? It varies depending on the asset and your location. For major cryptocurrencies like Bitcoin and Ethereum, the spread is typically between 0.8% and 1.2% for users in the US, UK, and Europe. But here's a key point. For other cryptocurrencies, especially those with lower liquidity, the spreads can be higher. This is also true for other assets on the platform like precious metals, which can have a spread of 1.9% to 2.95%. And keep in mind, these spreads can widen during periods of high market volatility. If the spread gets unusually wide, Uphold will even notify you in the app before you confirm the trade. Now, what about other fees? While trading is spread-based, there are other costs to be aware of. For example, depositing funds with a debit or credit card can have a fee, which is pretty standard across the industry. There are also network fees for crypto withdrawals, which vary by the specific blockchain network you're using. So, to sum it up, Uphold's fee structure is based on spreads, not commissions. The amount you pay depends on what you're trading, where you are, and current market conditions. They are transparent about their pricing, but it's always a good idea to check the preview before you trade so you know exactly what you're getting. Thanks for tuning in. Let me know in the comments if you have any other questions about Uphold or crypto fees in general. And don't forget to like and subscribe for more crypto insights. See you next time.